When looking at the stock market, you can see that there are a lot of companies out there. How you decide what to buy and what to pick, it's very hard. And especially if you're in a dividend investing like I am, it's even harder because you need to track what the dividends are doing, if they're paying, if they're cut and all that. If the company is actually increasing those dividends year to year, you just want to make sure your portfolio is performing well, you're getting those dividends paid, and you don't spend like hours and hours configuring your portfolio and trading stocks back and forth. So what's the best way to handle that? You can buy an ETF. So what's the ETF is? Let's figure this out together. Hello everyone, my name is Alex. Welcome to my channel. Thanks you for joining me here. Like this video, subscribe to my channel, and let's jump into our topic today. So today we're going to be talking about ETFs, specifically about dividend ETFs. We're going to talk about top 5 dividend ETFs out there in the market that you might consider buying, that you might want to choose to buy and hold forever. But first, we're going to remember what the dividend is and what is an ETF. So what are those dividends? So dividends are a way of company paying you back for holding their stock. Not all the companies are paying dividends, of course. It's mainly the blue chip stocks, the way they call them. These are the companies that are very sustainable. They have the business that's running well. And what they're doing, they're not reinvesting back a lot of money into their own business. What they're doing, they're paying back to stockholders like you and me. So we are getting paid these dividends, basically part of the profit that the company is making. They're also reinvesting back to their own business so they can grow and innovate. But because the company is on the specific level of sustainability, they're more interested in us stockholders, so they're paying us a part of that too. And you look at businesses like banks or very old companies like Coca-Cola and Johnson & Johnson or ExxonMobil. And different companies paying dividends on different schedule. Could be quarterly, could be monthly. And when you're looking at the stock, you're looking at this yield parameter, which basically tells you how much dividends you are getting back from this stock. So say if the yield is 5%, it means that you're gonna get 5% back from the value you're holding for this company. All right, so we figured that part out. We know what the dividend is right now. But now let's jump into the ETF part of it. So the ETF is an exchange traded fund. What it means that every single share contains multiple companies within it. So you can look at this as a box of assorted cookies, where the box is a single share and cookies are different companies. So you have a peanut butter jam here, you have a strawberry cookie and macadamia nut cookie and all that. So you're definitely gonna get the cookie you want. And what it means that you're very well diversified just buying this single box of cookies. If the macadamia nut cookie is not very tasty, you still have this strawberry cookie that you love. The same is with ETFs. The ETFs can contain 60, 100 companies within it. And then if say some of the companies are not performing well, you're still holding those that are doing great. And moreover, you don't have to study all those companies yourself. You just need to know what this ETF specific ETF is doing, right? And these ETF stocks, they actually have their rules and requirements how to get into those. For example, there's an ETF where the requirement is that the company that can be within this ETF has to have a yield of 3.5% or more. And I also think that ETFs is the best way to start investing if you're just starting out today. Why? Because you don't have to study a lot of companies. It's a way safer way for you to get started. And later on, you can consider buying different individual stocks if you know what you're doing. Now let's see what are the top 5 ETFs out there you might consider buying. And again, we're looking specifically on the Toronto Stock Exchange, but there are very similar alternatives on the US stock market too. So the first one we're going to take a look at CDZ.to, which is Canadian Dividend Aristocrats ETF, specifically directed into dividend growth. This ETF follows a dividend achievers index, which holds dividend stocks that have a history of increasing dividends for at least 5 consecutive years. The downside though of this ETF is the MER is very high, it's 0.66%. And the MER is the management fee that you pay to the ETF for holding and getting those dividends. The good side of this ETF though is that it's not dominated by banks like most of the other ETFs we're going to be talking about today. The yield is 4%, which is incredible. The next one is XDV.to, Canadian Select Dividend Index. This ETF uses a methodology of dividend growth, yield, and payout ratio, then chooses the best 30 companies with the highest yield and adds it to their index. The MER is cheaper than the previous one, but it's still pretty high at 0.55%. Also, this ETF has a huge exposure to financials, around 59%. The yield is pretty high though, 4.3%. So it's pretty good. Let's go to the next one. VDY.to, Canadian High Dividend Yield ETF. It's a Vanguard ETF. They're pretty new to the Canadian market, but have a pretty good selection and a pretty low MER, which competes to the other indexes as well. This ETF holds a lot of high dividend yield companies, but the methodology behind it is not very clear. And it's also a very high into the financial market, around 65%. The yield is pretty high, 4.17%, so you might check this out too. So the next one is DDV.to, BMO Canadian Dividend ETF. This ETF as well has a methodology of looking at dividend yield, growth, and payout ratio. With 52 positions, it has a MER of around the same as the other ETFs as well. In terms of sector diversification, this ETF is around the 37% into financial exposure, which is pretty low and it's pretty good. The next one is XDIV.to. It's iShares Canadian Quality Dividend Index ETF. It's actually a pretty new ETF with an inception date of June 2017. This dividend is a low-cost portfolio ETF with a good variety of high dividend yield companies. Also, this ETF holds only 22 positions and the MER is very low, 0.12%. This ETF is a low-cost portfolio of Canadian stocks with the above average dividend yield, good financial results, and a good history of increasing dividends. It's a very cheap ETF. It also has a very good positions comparing with the other ETFs we just talked about. So it might actually overtake those ones in the long run. I also have a sixth one, which is a bonus one, which is a PDC.to. It's an Invesca Canadian Dividend ETF. This ETF mirrors Nasdaq Select Canadian Dividend Index. There are 43 Canadian stocks with high dividend yield and a good record of growing dividends year over year. While this ETF is not very cheap, 0.55%, the exposure to financials is pretty low. It's at 30%, which is pretty good. And the yield is whooping 4.99%. And these are what I think are the best Canadian ETFs out there. So if you're just starting out or you want to expose more into ETFs, you might want to check those out. Thank you very much for joining me here. Thank you for staying up to this moment. Like this video, subscribe to my channel, and I'll see you in my next video. Bye.